All right, good morning. It is Monday, already August the 3rd, 2026. We hope everyone had a nice weekend. Working from home today. It's my kids' it's crazy, but yeah, down here they start school next week. So last week, for the kids at home for the summer, get to meet the teachers on Friday this week and kick things off next week. So crazy. My mom and dad are in town. All right, so I hear my mom like running my kids through like a Pilates workout. So if one of them comes running through the door because grandma's pushing them too hard, you'll know why. So, but yeah, we hope everyone's enjoying the summer. I know it feels like it goes by fast for everyone, but I guess that's the way it goes. Camp's right around the corner, and the season's kicking off, and then we'll be traveling again. It's hockey season, so great. All right, so looking at markets last week, you saw the U.S. market up about 1%, international markets up about 2%. There's a Fed meeting last week, so as expected, the Fed did not change interest rates. But there were 3 dissenting opinions on the committee. All right, and these are largely, and so these 3 dissenting opinions actually wanted the Fed to hike 0.25%. All right, so and certainly the reasoning for wanting to hike would be, the inflation data has been a little suspect again lately. All right, so last week 3.7% for June, month over month. Comparing June to last June, 3.7% year over year, and that's coming off of 4.1% May year over year. Right, so definitely above like the Fed's target, 2%. All right, and so again, we'll see the way it shakes out, but definitely a tailwind for the markets recently continue to be just these strong earnings reports. All right, so we're getting a number of earnings reports coming in. Obviously, some winners, there's always going to be some losers, but as a whole, earnings season again has been really, really strong. All right, and so that's why you see markets continue to hang in there and do okay through these summer months. Also making headlines last week, and this will have very, very little impact on any of the families that we help, but an AI-focused hedge fund called Situational Awareness, which was a big hedge fund, $45 billion worth of assets like a month ago, collapsed, forced liquidation over the last month. All right, so how do you go from 45 billion to zero? Well, it was a real mismanagement of leverage, right? So so to begin with, a very aggressive, risky strategy, right? Because you're investing in a lot of very volatile AI stocks and chip makers that are providing the AI companies with what they need to build their systems out. And so when you have an already volatile strategy and then you lever up, right? So using leverage means if a chip stock goes down 1%, if you're 4x levered, like that means your fund's going to go down 4%, right? So if something's down 1, you're down 4, right? And so I think this hedge fund, their underlying positions were down 20, 25%. You do the math, you multiply by 4, and that brings you pretty close to zero in a real hurry. In about a month, $45 billion, forced liquidation, collapsed. Just kind of goes to show how risky some of those alternative investments, some of those more complex strategies, which again, as I led this off with, I feel appropriately like that's not going to impact the families that we help. That kind of investment strategy philosophy it's just not what we do. So again, questions, comments, concerns, please don't hesitate to reach out to our team. Strax is still on the road, Western Canada, but don't hesitate to reach out. Enjoy the rest of the summer here, and again, camp right around the corner. So we'll talk to everyone soon. Take care.